Hey everybody, today is Saturday, January 4th, 2020. Taking a look at the S&P 500 to kind of recap what happened on Friday and take a look at what we have in store for us as we get back from the Christmas and New Year's holiday and begin to trade January week 2, 2020. Okay, so here's our 5-minute chart. You can see here where we, closed up on a new 2020 and all-time high, a new 2020 high, a new all-time closing high, and then we gapped down open on Friday morning after some news-driven downdraft that happened overnight in futures. And as you can see, just because we were down quite a bit in the futures overnight, it doesn't always translate to continued sell-off in the morning. So always keep that in mind. And the same thing holds true when we're rallying way too much overnight. There's a counter trend rally that comes in. A group of players know that there is some easy picking, some easy squeezing when it comes to a way too overnight bearish activity, and the same thing with way too bullish overnight activity. So you often come into these big gap up opens that sell off to a certain point. Well, here was Friday. We gapped down open, and you can see that was just immediately bought up, squeezing right through all these stops, and we wound up going all the way up to the high for the day as we got into the European close, came back a little and topped out for the day just around 1 o'clock Eastern time, just before 1 o'clock. We came back down and we tried to get back up here and make another new high at the end of the day. This was actually news driven once again here. I remember this. We got some second wave news regarding the Iran strike that had happened the night before. Well, there was some news being released that Iran was striking back at a U.S. base somewhere over there, and so we sold off on that. That turned out to be unfounded news. It was fake news or whatever you want to call it, and we came rallying back, but we couldn't get back above resistance, and we wound up kind of selling off into the close. But our close remained above 32.34, which we've talked about a lot. That is a big pivot point. That's a big breakout point. It's a double up of the Q3 2019 range. It's been explained about a million times. I won't go over it again. I'm sure you know by now what I'm talking about when I talk about 32.34. Anyway, so we managed to hold a close just above that, but we closed below the halfway back point for the year, and the year's range is this high that was on Thursday, the current all-time high, and then this low that we made on Friday at 32.22.24. So the halfway back point is on 32.40, and that also just happens to be the closing high for our previous year, 2019. So that was our closing high for all of that year. So that's kind of interesting. That in order to determine where the algo is kind of like stopped and drew the line in the sand as far as how far down we were allowed to go for the day, it was kind of a double down from our high point that we had made to where our closing high was for the previous year, and then they just doubled down from there. That's another way to look at it. Anyway, so that's the 5-minute chart. Let's take a look at the roadmap and where things are left. You can see that we ended up with that flush down. We broke down through the 10-day simple moving average, coming back here, closing just a hair, like I said, above this 32.34 level. This bull fork median line, which I just introduced with the start of the new year, and you can see that we've been trading up and down and around this. The high for the day came up and was a direct rejection right at that median line of the bull fork. So anyway, that's what's going on the roadmap. If we are going to begin to sell off some more on Monday, January week 2, obviously we've got to see 32.22 go down. We could come in with a gap down open below this level. And if the overnight inventory is not too overly bearish, maybe we push down lower and we continue this sell-off and take it on through down to testing the 20-day simple moving average. If we come in and we open even just below the 10-day simple moving average, which is rising, is going to be right up in here in this 32.34 level. So if we have any kind of open down, we may just open below the 10-day simple moving average, and that might be enough to fight back against the counter trend rally that we would get on an overnight bearish inventory. Opening below that 10-day simple moving average might give us the rage to push down lower. So what we really got to look for is whether we're going to gap up open or we're going to gap down open. And any kind of little gap down open is probably going to mean a break of the 10-day simple moving average. So really watch yourself about buying the dip, or if you held calls over the weekend, be protective of those on the open if we open lower at all. If we're going to open higher, this bull fork median line keeps rising. We've got to get ourselves over the high that we hit on Friday at 32.46. We really need to push through about 32.50 or so and keep on going. And we have an unresolved all-time high that had been made on Friday night, overnight into Friday. We were up at 32.63.50 on ES, which would get us to about 32.63 flat, which was already a level that we had marked on our roadmap to begin with. So, we have that to resolve. So if things aren't that bearish over the weekend, if we come in and we open at the very least flat to slightly up, we should be looking for that move up to resolve this 32.63. And then from there, if things want to roll over and sell off, that's fine. But, we were obviously on our way someplace very bullish overnight into Friday before that news hit. Okay? Anyway, let's take a look at one more thing here. This is the S&P 500 daily chart backed out, showing the last few years. And I want to show you that what we are in is an inverse head and shoulders that has been spanning out over several years now. And we have just made the breakout of that. So this has been in the works since the beginning of 2018, and here we are 2 years later, and we're just a couple of months into this. If we are going to correct, maybe what it's going to be is a halfway back test of this breakout range here. This would be from the Q4 low on up to whatever all-time high we make. If we were going to test that back right now, testing back halfway on that would get us to 30.57. If we travel up just a little higher, say to 30.85 or so, 32.85, which is one of our targets on our list to begin with, then a halfway back is going to bring us in a little higher, and it's going to rhyme with testing right here to this little nub that sort of stands out. This was that December low when we came back from Thanksgiving, when we had that weird little sell-off, and this was a break of the 10 and the 20-day simple moving average. So that just adds more thought to the idea that maybe we're going to go a little bit higher. We've already got that 32.63 to resolve. Maybe we're going to go about another 20, 25 points on top of that, then roll over. And if we were to test halfway back of this whole move that we've made since the low of the fourth quarter, then maybe what we want to do is find a place that is important to hold. Maybe this December low is that point. For a long time, I had been calling out this 30.28 here as the important point for us to back test to. And that still could be the case, and that would be like a little more than halfway back. That would maybe be a 61.8. If you're into fibs, that's the next fib up from the 50 fib is the 61.8. So a little overshoot of more than halfway back would get us back to test and hold above that July high. And anyway, that's it. I'm not going to drag this video on for much longer than that. I just wanted to discuss some possibilities of what we could be looking at as far as when the correction gets going, what we should be looking for in terms of maybe if we're going to be going a little higher, and why and how pulling back halfway back from that point would be a meaningful place where we could hold something that's important, some kind of an important level that powers that be do not want to see go down. And that might very well be this little low that was hit here in December. Okay, that's it. Have a great rest of your weekend. As always, good luck and good trading.